Two really big headlines coming out of the third quarter 2012 data for the Bay Area apartment market. Rent growth levels are cooling and apartment construction is surging. Welcome to Apartment Market Dynamics from MPF Research. I'm Jay Parsons and I'm with Greg Willett. And Greg, when we look at the Bay Area numbers, when the new numbers come out every quarter, the first thing we always look at is that annual rent growth number. Bay Area has been leading the nation for quite a while now with double-digit rent growth now in each of the past 4 quarters. So how big was that drop-off in third quarter?
It's a pretty big slide when you look at the quarterly numbers, but we do need to keep that in perspective and realize that the Bay Area is still number one across the country for rent growth, just telling you how big that premium was before. We've got a chart here for you that shows annual rent growth by quarter in the Bay Area over the past few years. And you can see that the market reached 12.4% annual rent growth in fourth quarter of last year. That figure then cooled to 10.3% by second quarter of 2012. And now as of third quarter, we're down another 300 basis points to a 7.3% annual growth rate. And you can really spin that a lot of ways, but the bottom line here is that the 3 metros in the Bay Area, in fact, are still the 3 top rent growth markets across the country. You've got San Jose in the number 1 spot with rents up 7.8%. For San Francisco, the number is 7.4%, and Oakland is at 6.7%. You look elsewhere across the nation, and you've really got only 3 other metros that are even within shouting distance of Bay Area right now. That would be Charlotte, New York, and Denver.
And let's quickly show you an occupancy chart here, and you can see that vacancies certainly aren't a problem. Occupancy as of Q3 came in matching the region's 5-year high of 97.1%, and among those individual metros, both San Jose and Oakland log rates of 97.4%. San Francisco not far behind at 96.7%. So, Greg, vacancies certainly don't help explain any of that cooling going on in the annual rent growth numbers coming down to just 7.3%. So why did rent growth levels cool?
Well, several factors can come into play, and one of those is construction. You alluded to at the top of the video that lots more activity on the construction front. That's a little bit of the story. Affordability comes into play when you consider how much rents have been going up over the past couple of years. But really, the wild card here is operator behavior, and it tends to be more important in this market than it is in some other places, and I think that's really what is the driving force right now. Bay Area is a place where you do have very active political groups, and you push rents too hard for too long, you're going to get a lot of activity pushing for some rent control to come into play. And I think some of the big operators are reacting that, cooling that rent growth number down from double-digit levels just to avoid local governments stepping in.
And Greg, one thing to add here that I think most people see that 300 basis point drop off in rent growth and maybe have some worry about that. But it's important to note again that, as you said earlier, 7.3 is still a very big increase. And let's talk about the economy real quick, because that's really what's helping separate Bay Area from the rest of California specifically. Annual job growth levels are the highest seen since the 2000-2001 tech boom. 84,900 jobs added just in the past year.
And let's look at those a little bit closer. And certainly San Francisco, San Jose, they've been pushing those big numbers for a while on the economy side of things. Oakland has actually kind of been a laggard, and suddenly now that one is doing really well. Also, annual employment change as of third quarter was at 18,900 jobs, a 2% employment growth pace, and that's really the best numbers we've seen in Oakland for a decade.
So, Greg, if I could summarize what we've talked about so far, still very good apartment fundamentals across the board. We haven't talked about submarkets and product age groups, but they're all very, very good. And also a booming local economy. And this really isn't a new story for those of you who've been operating or investing in the Bay Area or just looking at developing in that area. There's been a lot of developers targeting the Bay Area early on in this cycle, since the Bay Area was one of the first metros nationally to start rebounding with some really impressive apartment fundamentals. And so as we've worked through that long process of getting projects approved, since the Bay Area, as you know, has that high barrier to entry status, we are just now starting to see construction at really high levels, now at the highest levels, and in fact, in more than 2 decades. 11,589 units underway as of Q3 2012. And of that total, here's what's really interesting. Of that total, 60% are located just in 2 submarkets, Soma, or south of Market in San Francisco, and also the North San Jose Milpitas submarket. In Soma, 2,765 units in process, about half of that completing in the next year. And in North San Jose Milpitas, nearly 1,400 units completing in the next year. But in the total number of units under construction is 4,201 units. And that's going to expand the apartment base once it all completes by 46%. So an incredible number in that submarket. And so, Greg, let's wrap it up here. How does all this construction, plus those fears about rent control, what does all that mean for that forecast going forward?
Certainly things will change in those 2 submarkets where there is so much construction going on, and these new projects better work at the current rent levels, because I really don't think you're going to have any growth in those 2 pockets for 18, 24 months. But the rest of the metro should do pretty well, and our overall expectation for the numbers in the Bay Area, good. Probably the area won't continue to get rent growth quite at where it is right now, but still a sizable premium over the U.S. norm. Still the number 1 area across the country, probably rent growth at or a little bit north of 6%.
So there you have it. That wraps us up for Bay Area. Until next time, for Greg Willett and for MPF Research, I'm Jay Parsons. Thank you for watching Apartment Market Dynamics.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, NPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.